The Dividend King 3M is now at a 52-week low, trading at $147 a share, and is down 17% year to date. 3M trading at this price is currently giving it a dividend yield of 4.04%. So when you combine that high dividend yield with the fact that 3M has increased the amount it pays in dividends for 64 years straight, you can't help but wonder if now is a great opportunity for dividend investors to look into buying 3M stock. Now, the reason for 3M stock dropping could be due to many reasons, but it's likely not due to the recent earnings report by 3M.
3M just reporting, and the company coming in with better than anticipated earnings by quite a bit, $2.31 versus the $2.01 that the street was expecting. Revenue came in just above expectations, $8.6 billion versus the $8.58 billion the street had been looking for. And if you're listening, just taking a look through the release to see what's going on with some of this, 1.3% organic growth in the fourth quarter, and that comes on top of 6% organic growth from a year ago. Mike Roman, who is the chairman and CEO, just talking about how they delivered the strong performance. He pointed out to notable strength in December. So that's something. If you were going into the end of the quarter, he said it was notably strong then. He also said the team really managed this, all of this in a difficult environment, talked about the supply chain disruptions. He said they made good progress on pricing actions and they controlled their costs going into this. They are not giving guidance at this point, but they will give that in the conference call a little bit later. But if you, again, just look through some of these numbers, it looks like better than expected across the board. That stock right now up by about 0.7%, and that is in a down market with the Dow down by 177 points right now.
Since 3M released its earnings, the stock is down from $174 a share to $147 a share. So if 3M beat their earnings expectations, then what are the reasons for the stock dropping to its 52-week low? The largest reason for this is the fact that 3M is currently facing two major lawsuits that could end up being very costly for the company. The reason behind these lawsuits is due to some adverse effects from some of the company's products. 3M just recently lost a lawsuit and was hit with a large fine, but it also won a similar lawsuit, making it hard to tell what the actual risk is here for future lawsuits. These lawsuits are definitely something to take note of when looking into 3M stock, but when you look at their payout ratio, which is sitting at 61%, and their free cash flow growing at an average rate of 11.38% over the past few years, 3M should have plenty of capital to put towards these lawsuits without hindering their ability to grow as a company. But the biggest reason that I believe investors should consider 3M stock is because of its intrinsic value. And to gain a better understanding of 3M stock's intrinsic value, we're going to jump into my stock valuation spreadsheet in Google Sheets. If you'd like to be able to download this valuation spreadsheet, then you can head over to my Patreon page at the link in the description. Okay, so we are currently looking at my stock valuation spreadsheet, and on this spreadsheet you can see I have 4 different valuation models, including Graham's valuation, a discounted cash flow model, a multiples valuation, and a dividend discount model, which will all roll into my output tab. So if we jump over to my home tab for this valuation model to work, we're going to go ahead and put in 3M stock ticker and hit enter. And for our first valuation model, we are going to actually jump over to Graham's valuation. And here you can see I've already built out this model using Graham's revised valuation formula. For this formula, you can see we're going to take our earnings per share. We are then going to multiply it by the price to earnings of a company with no growth. I gave this a growth rate of 7% because that's what analysts are projecting. The average yield of AAA corporate bonds is currently 4.4, which is why we're multiplying by that. And then we're going to divide it all by the current yield of AAA corporate bonds. And you can see when we do this, according to Graham's valuation, we come to an intrinsic value for 3M of $188.34. So let's go ahead and jump over to our discounted cash flow analysis model. So in order to perform a discounted cash flow analysis, the first thing we need to do is project a growth rate for the future free cash flows of the business. And in order to do this, you can see I used 3M's historical free cash flows and found that they had an average growth rate of 11.38%. Now, I don't personally believe that their free cash flows will grow at quite this pace in the future. So for this model, I used a growth rate of about 8% due to some different factors. I then took this 8% and projected their free cash flows forward about 10 years and also calculated their terminal value, which is the value of all the free cash flows past the year 2030 in this situation. And then of course, I'm going to take the present value of all of these free cash flows, which you can see I have done right there. I then took the sum of these future free cash flows and I added all of 3M's cash and cash equivalents and subtracted their total debt, and this allowed me to calculate their equity value. I then took the equity value and divided by their number of shares outstanding, and after doing all this, according to our discounted cash flow, we can see that I found 3M had an intrinsic value of $234.89 per share. I do believe the discounted cash flow analysis is probably one of the most effective ways to value a company, but let's go ahead and jump forward and look at our dividend discount model as well. And the idea behind the dividend discount model is you should be able to value a company based on their expected dividend payouts and their dividend growth rates in the future. You can see here, in order to do this, we're going to use the historical dividend growth rates for 3M and project forward what their future growth rates will be. So you can see I plugged in how much they've paid out in dividends over the past few years. You can see they have had a pretty good dividend growth rate for the most part, and their average growth rate over the past few years was about 6.22%. So I then applied a discount rate, and based off of all of these metrics, using this formula right here, the dividend discount model projects an intrinsic value of $226 per share. So let's go ahead and jump onto our output tab so we can see what 3M's overall intrinsic value is. And here on our output tab, you can see I have all 4 valuation models listed. I didn't use the multiples valuation model for 3M because I didn't feel like comparing them to their competitors would provide a fair valuation for 3M. So for Graham's valuation, we found an intrinsic value of $188 per share. For our DCF model, $234 per share. For our dividend discount model, $226 per share. Now I typically like to see the average of all my valuation models, which we can see here was about $216 per share, which compared to the current price of $147 per share, that's about a 32% difference. Now I am a value dividend investor, so I always believe in applying a margin of safety. It'll just allow you to make a lot safer investment decisions. So for this situation, I'm going to apply about a 10% margin of safety and hit enter. And you can see based off of this, our acceptable buy price for 3M is $194 per share. So based off of this, our valuation spreadsheet is telling us this is a stock that we should be buying. Now, when considering buying 3M stock, it is important to remember some of the other factors affecting this stock, such as their legal disputes, and it's also important to remember that stocks can sometimes take a long time to reflect their intrinsic value. Just because 3M's intrinsic value appears to be much higher than its current price does not mean that the stock will reflect that in the next few months. Value investing has proven to provide great investment results for nearly a century now, but value investing should still be for investors who consider themselves to be long-term investors. Let me know your thoughts on 3M stock in the comments below. If you'd like to be able to download this stock valuation spreadsheet in Google Sheets, then you can head over to my Patreon page at the link in the description. So with that being said, thank you guys so much for watching this video, and please don't forget to like and subscribe to the channel.